In following chapters, we're focusing more on balance sheet accounts. Following chapters in 8 to 9, all on assets. 10, 11 on liabilities, then the following chapters on equity. And then at the end, we talk about cash flow statement. Okay, 8 and 9, we're moving on to balance sheet accounts, some of the important issues that you need to know besides putting together a balance sheet. What are the detailed information in receivables account or long-term asset accounts? Okay, so this chapter 8 is all about receivables. Breaks down to accounts receivables, which should be pretty familiar by this account by now. Also notes receivables. Okay, we haven't talked a lot about this notes receivables. Hopefully after spring break we'll discuss some more details.
Skip to chapter 7.
7 we're going to move it to the end, but if we don't have time we're probably just going to mention a part of that. Okay, so chapter 7 is a little bit different from all the other chapters. It's about banking systems. Okay, adjustments. If we have time, we'll come back to that chapter later. All right, accounts receivables. Again, the definition here, you should know this by now. It's a promise to receive cash from customer. A promise from customer made to you because you provided service or provided sales to customer. All right, so this definition, we talked about this in chapter 2, chapter 3 already. The collection period for accounts receivable, generally speaking, is about a month or so. Okay, so the billing cycle starts with once you provide the service, provide the sales, the goods to customer, then you would also attach an invoice to them stating the dollar amount that they owe you and also the dates that they need to pay back this money. Okay, so accounts receivable, basically again, it's a promise of payment that you'll be receiving from customer and clients. Now, usually accounts receivable in the general ledger, we not only have this one account, we usually also have subsidiary accounts that state the specific client's name. Okay, so in the business, usually we have separate, think of it as small accounts receivable accounts under the general control account, the big accounts receivable. We usually separate different clients into the accounts receivables, just to control and make sure that which client has paid the money and which client is still pending the payment. Okay, those are the ones that we call subsidiary accounts receivables. So they're just like regular T accounts, it's just that we separate them based on clients, based on customer, and more detail, provides more detailed information. But at the end of the year, what you see on balance sheet will be a summary of those clients' account altogether. And so this chapter here, we're dealing a lot about the cases of if customer is not able to pay the money on time, we're not able to pay the money at all. Okay, so there's some cases that accounts receivable gives, basically has an advantage for customer because they could purchase the item even though they don't have cash on hand. This also allows corporation to make sales to some of the customers that do not have enough cash fund in due. Okay, so this is a benefit for both parties in the beginning. But later on, once it passes the due date of customers' payment, accounts receivables payment, and then after constantly trying to reach the customer, after several attempts trying to ask them to make the payment, in cases that customer has a financial difficulty or just still, they have to delay the payment to later on, they just don't have the cash on hand, this chapter will dealing with some of the cases how to take care of those accounts. Okay, those are the ones that we call uncollectibles. Uncollectibles represents accounts receivables that has past due and we're not able to collect on time or even at all later on. Perhaps they have some bankruptcy issue, financial difficulties issue, and how do we take care of these in journal entries? Okay.